an example trade for Nvidia, Tom.
Yeah, maybe not as aggressive as your guest was there, but it's still a bullish outlook here in Nvidia with this example trade that I got here. And it just takes advantage of, we've seen great reports out of Nvidia, but typically over the last few quarters, we might see a pop and then a sell-off a little bit. So I looked at a strategy that's a little bit more passive, a little bit more conservative, but still takes that bullish stance here. Going out to the December 5th weekly option. So 15 days to expiration, got a couple weeks in this. And this is one of those strategies you can do over and over again. You just pick a strike where you think the stock's not going to go below over a specific duration. I looked at the December 5th weekly, the 185 strike put, selling that as a cash secured put, neutral to bullish. You're going to collect roughly about a 320 credit on it, maybe about 350 right now. The stock has continued to pull back below 193 now. But the credit you collect is what you can make on this. So if you collect $320 per put that you sell, where do you start getting hurt on a position like this is you go down to that break even of 180, 180 to the downside. So you've got a cushion of about 6%, nearly 6%, before you start getting hurt on this trade. Now, you also have to look at this capital intensive, right? You can look at this two ways. I just want to keep that credit that I collected with the fact that I think it's going to stay above 185 or that break even of 180, 180. Or I'm willing to buy the shares if the stock continues to move lower, goes below 185. I get assigned on that put. I'm actually buying the shares at 180, 180 to the downside if I'm still short that put and it's below 185 at expiration over the next 15 days. So you've got to have a lot of capital on this type of strategy. But if, say, you put in $181.80 bid for the stock, you might not ever get filled on that. Here, at least you'll be able to profit if it doesn't fall below 185.
So what were your takeaways from this earnings report? I mean, there was a lot to like, but let's sort of break it down as to what really stuck out to you and what is the story moving forward now?
Yes. So I'm going to talk about the numbers first.
Yep.
And then I'm going to talk about how the technology drives the numbers, which is what everybody is missing, all the analysts, the people who looks at charts. You have to understand the actual technology. So if you saw their performance, they actually in one quarter did double what they did in 2023, over $50 billion. Also in terms of 2024, they've almost exceeded their entire earnings in one quarter than they did in the entire year. So the real question is, why is that? And what's so special about NVIDIA? And the real answer is basically the AI revolution. But what I think is important for people to know is they should understand that AI is almost like electricity, essentially. Essentially, electricity went through people's homes and then their infrastructure, then their offices and their factories. AI is only beginning, in my perspective. But even more important, and Jensen has only started to talk about this, and I've actually been talking about it for 2 years, which is the transition from Web 2 to Web 3. And Morgan Stanley, Citibank, and Goldman Sachs has said that it will be at least a $10 trillion transition by 2030. And when we talk about Web 3, we talk about the immersive web, 3D, using digital twins and AI combined. And if you look at 10 trillion in revenue, I can easily see NVIDIA getting 1 trillion of that, 1/10 of it. And then the last item is the data centers, which you saw 90% of their revenue is from the data center. And again, we're looking at a cycle. We're moving from CPUs to GPUs. For 60 years, CPUs dominated the environment, single processing. Now we have accelerated computing, which is basically what drives AI. You need a GPU chip, which is what NVIDIA sells, to drive AI. And what that is saying is they're saying it's 3 to 4 trillion by 2030. So to think that NVIDIA would get 1/4 of that, where they're right now getting 80% of that, is actually a low estimate. So my prediction of $1,000 a share and $1 trillion in revenue is actually conservative.
And everyone seems to be a winner here in this environment, particularly when you talk about the TSMCs, which manufactures the chips, when you talk about the memory names that are obviously supplying to an NVIDIA, when you talk about the semiconductor equipment type makers like the ASMLs of the world. And this is obviously why we have seen a reaction like we saw post-earnings. But can it keep it up? I mean, can we continue? I mean, I know you've thrown some numbers out there, particularly when you talk about AI workloads and the migration and the move to Web 3 and the $1 trillion that, it could potentially lead to. But I mean, how sustainable is this? Because, Jensen Huang has also pointed to some of the constraints out there. I mean, there seems to be some worries around circularity of this financing, but more around the energy that's actually going to power all this stuff too.
Yeah, I mean, and just to give you an idea, for every one chip Nvidia has, there's 12 orders. So it's the supply constraint, which is the issue. It's not the demand. But to go back to that in terms of the overall market, and as aggressive I am with $1,000 a share and $1 trillion in revenue for Nvidia, it's based on their products and their performance. I think investors have to be very careful about all those other stocks that do not have revenue or have negative PEs. And that's where you have to be careful. But in reference to Nvidia, I'm a practitioner, as I mentioned to you before this discussion, and I see the value of Nvidia. So if you want to talk about the data center, you must be wondering, how are they growing these numbers so fast? It's actually very simple. Anybody would do it, buy it all day long. When you put their chip in, it has 10 times more performance than a CPU. It costs 1/10 the amount, and it takes 1/10 the power and 1/10 the space. Who's not going to buy their chip all day long? And not only that, once you put it in, it actually drives AI, where you couldn't do that before with CPUs. So in terms of the data center, that's a layup. But really where the value is that has not been touched is in the physical AI space. We see a lot of generative AI, ChatGPT. We see the beginning of agentic AI, where you have an AI agent do work. That's only beginning, but it's starting to come. But in the physical AI space, what does that mean? That means where you create a digital twin of a building, and then you run it with AI in the digital twin. And generally, that's what I actually do. And we're getting 50% improvements. In addition to that, right now I'm looking at a pilot in Florida where we're doing a road where we're basically building a digital twin of the whole highway. And we're going to run it from the digital twin, which will create autonomous driving, which will create automatic detection of problems on the road. If you wouldn't believe this, but right now, they actually do most of those observations by sight. And if I remember correctly, the Titanic sunk in 1912 by looking at sight. We're here 100 years later, and most of the construction firms still are doing that by sight, believe it or not. So
Wow,
what does that mean? That means all the roads, the bridges, the tunnels are all going to be converting to Web3 and all going to need GPU chips, which means there's trillions of dollars of revenue potential for Nvidia.
Okay, I mean, everyone's talking about the ROA and obviously how companies are adopting AI, and I suppose that's the next big story.
Thoughts on this blockbuster report we got from NVIDIA yesterday afternoon?
Hey, good morning, Molly. I mean, it was fantastic. I don't think I've ever seen a company execute this well. I mean, yeah, they grew earnings 60%. They're printing a ton of cash. But for me, is guiding for $300 to $500 billion in revenue over the next 2 years is really insane. I think the reality is all of us thought, or a lot of investors are thinking, that this AI is more of a bubble territory and kind of almost getting to the end. But NVIDIA has shown us that demand is just really, really strong and will continue to be for years to come.
And Louis, coming over to you, we saw the blow past the sky high expectations. How does this quarter change the narrative that we've been seeing pivot a bit away from into this AI bubble territory? Are we looking at peak euphoria here, or did we get peak validation yesterday?
Yeah. So exactly. So we didn't see any economic data coming out of Washington, D.C. In October because of that shutdown. But I'm going to say that NVIDIA's earnings probably replaced them. That's my take. And the question was never, can they beat the estimates? It was, can they raise the forward guidance for Q4 and for the following year? And that's exactly what they did. You mentioned that $500 billion in pre-orders. They're selling out GPUs, the cloud GPUs. This company is on full steam ahead. I think the AI rally is just only going to continue, and we're still bullish long-term on NVIDIA.
And Hatem, what about this quarter gives you confidence and tells you that NVIDIA's business is still grounded in fundamentals and just not hype?
Well, first of all, they lost the China business and they still grew 60% year over year. So that tells you how well they execute. Two is really the margins. NVIDIA is running a 74% margins. You don't. I think Jeff Bezos says a long time ago, your margins are my opportunity, and Nvidia seems to be able to keep these margins because I don't think there is any other player in the space that can come close to how good their full stack is. So it's not just a GPU story; it's just really software, building GPUs, and really the ability to iterate and innovate every year after year. So if you're a data center trying to spend, I don't know, $5-10 billion or more, you're only going to Nvidia and Nvidia alone. So really, that's why I think the business is so resilient going forward.
And Louis, a lot of the sentiment that we were hearing yesterday when we were previewing the earnings was that it wasn't going to be so much about the numbers, but it was going to be about the guidance and if they could raise it and by how much. And that was really going to determine the response that we saw. They did obviously meaningfully perform well and meaningfully raise guidance. How meaningful is that $500 billion pre-order figure for Blackwell and Rubin?
Well, I think it's extremely meaningful. I mean, I think it's hard to make a bear case against Nvidia right now. It's practically impossible. And I think the automotive revenue is something that we should really look at too right now because it only grew at 1% this past quarter, but I think it's an overshadowed and overlooked part of Nvidia's business right now. You take a look at Waymo, Uber, Aurora, they're all using Nvidia GPUs to train their AI models for autonomous driving. So if you're looking at Nvidia, you're not only looking at these GPUs, but you're also bullish on autonomous driving, which we are. And if you are bullish on autonomous driving, then I think that Nvidia has the opportunity to grow in this space a lot more than we're expecting.
And Hatem, I want to talk about some of these circular deals. We kept having these conversations about the circular nature of some of these AI deals coming into the earnings yesterday. Nvidia is certainly doing a lot of that, investing in these startups that are then ordering Nvidia chips. How concerned should investors be that this is distorting demand, or if they should be concerned at all?
It's a fair concern, right? Like you don't want to be investing in your customers and have them just turn around and basically round tripping and buying more chips of you. But I think the question here is, how do you believe what Jensen says, which is the size of this AI trend is going to be X amount, so it's going to be several times bigger than it currently is. And what the Nvidia is doing by investing in these top players, they're investing in the startups, they're investing in data centers, they're investing in design. What they're doing is really they're priming the pump, right? They're making sure they own the whole kind of infrastructure, they own the whole space. And what they're doing is they're helping these newer players really invest or at least build on the Nvidia ecosystem, so they can actually continue to be the main player. So for me, I think looking at these deals and knowing that a lot of these deals are actually financed by revenues actually is a positive, not a negative.
And Louis, last question to you. If you're a long-term investor watching Nvidia, watching their performance, hearing these numbers, hearing their outlook, what do you do right now? Do you buy more? Do you hold tight? Do we start trimming?
Yeah, I think that's the question. We've been long-term bulls on Nvidia, and we've been invested in Nvidia for a while in our funds. But I think for recent investors, they should buckle up and get ready for a little more volatility. I think quarter by quarter, we're going to be keeping a close eye on Nvidia because they really are almost holding up this economy. And I think you saw that this past month, we were down. Nvidia was down 8%, and I think that dragged down the entire market as well. So if you're a short-term investor right now, I'd say hold on to your shares, but just look to the long term because that's where the real growth for Nvidia is.
And Louis, I highly doubt that you were watching a board while you were talking just then, but you said to prepare for some volatility. And as you were talking, we watched Nvidia turn into the red, now trading down about 0.25% after seeing some pretty substantial gains on the heels of their earnings. But
you're sold out of Blackwell. That's what you said, but also that $500 billion forecast, which is Blackwell Rubin, has room to grow. How do those fit together?
I said sales are off the charts for Blackwell, and NVIDIA GPUs in the cloud are sold out. We got plenty of Blackwells to sell you. We have lots of Blackwells coming. We're making a lot of Blackwells, and we have a bunch of Vera Rubins coming. And so business is very, very strong, but we've planned our supply chain incredibly well. We have the largest supply chain in the world. Our partners, TSMC, our memory partners, SK Hynix, Micron, Samsung, are doing a fantastic job supporting us. And all of our systems partners, Foxconn and Quanta and Wistron, our packaging partners, everybody's doing a fantastic job supporting us. And we've done a good job planning for a very, very strong year. And we've done a good job planning for Vera Rubin. So sales are off the charts. NVIDIA GPUs in the cloud is sold out, but we've got a bunch of Blackwells to sell.
Jensen, what's the road ahead for Vera Rubin? It's one of the most common questions we get for you of how that ramp will go relative to what we saw with the Blackwell generations.
Well, the silicon for Vera Rubin, 7 different chips are back in our labs. And the bring up is happening across engineering teams. Probably a couple of 20,000 people are working on bringing up Vera Rubin. From silicon to systems to software to algorithms, people are working around the clock, and this bring up is going beautifully. We're on track to deliver Vera Rubin about Q3 timeframe of next year, continuing our once a year cycle. Vera Rubin is already assured a huge success. Everybody's incredibly excited about it. Can't wait to show everybody. And then one last thing is that the rack architecture, the rack scale architecture is completely revolutionary. It includes a scale up switch called the NVLink. NVLink 72, our 5th generation, is the only one of its kind in the world. This rack architecture, which is incredibly complex, started with Grace Blackwell, then Grace Blackwell Ultra. It is transition to Grace Blackwell Ultra is incredibly seamless. The same rack scale architecture is going to be used for Vera Rubin. And so the supply chain is all used to it. This complexity that we enjoyed with Grace Blackwell transition, we're now incredibly smooth running. And so I think Vera Rubin is going to be just really smooth, and we're going to ramp it really hard.
Jensen, I tried to go through what the CFO Colette Kress said about China. In the quarter gone, it seemed like there was not meaningful H20 sales because the demand wasn't there, even if you were permitted to sell H20. And then in the current period and going forward, NVIDIA seems committed to working with both the United States and China to sell what Colette called more competitive compute. Where do we stand with that? And could you just clarify what Colette was talking about in the current state of play for China?
The most important thing she said is that we've said for some time now, our forecast for China is 0. All of our forecast, the guidance that we showed, 0. We should start, that's the most important thing that she said. She also said that effectively China is a very important market to us. It's very important to the United States. It's very important to China. We would love the opportunity to be able to re-engage the Chinese market with excellent products that we deliver and to be able to compete globally. The Chinese market is very large. This year, my guess is probably about $50 billion. It's great for the American people that we're able to compete in the Chinese market. It's great for the China market that we're able to provide NVIDIA's technology to them. It's great for the rest of the world as Chinese software companies and Chinese open source models leave China and are used all over the world. And so I think it's fantastic that it would be fantastic if we're able to participate in the China market. But for now, we should just assume our NVIDIA's forecast for China market is 0. We're going to continue to engage the U.S. government, continue to engage the China government to advise them and to encourage them to allow us to go back and compete in the open market. And so until then, we should assume 0.